Welcome to This Explainer. Okay, so today we're diving deep into a seriously impressive second quarter from the Travelers companies. Let's unpack the hard data directly from their latest earnings release and see exactly how they managed to pull off these massive financial wins.
Let's just come right out of the gate with the sheer scale of this win, a staggering $2.2 billion in net income. And keep in mind, that's not a cumulative annual number. That is just one single quarter. Now, if you want to know how effectively they're actually using their capital to get there, take a look at this, a 27.1% return on equity. I mean, for anyone watching the insurance sector, hitting that kind of capital efficiency, it's a monumental achievement and a massive green flag for their operational discipline. To see exactly how they pulled this off, here's our roadmap. 1. A blockbuster second quarter. 2. Unpacking the profit drivers. 3. Decoding the combined ratio. 4. Winning across all segments. And 5. Returning value to shareholders.
All right, let's jump straight into Section 1, a blockbuster second quarter.
Grounding ourselves in their official July 2026 earnings release, the headline here is absolutely undeniable. Travelers didn't just have a good quarter. According to their own document, they had an excellent one. And you can see exactly why. The year-over-year jump is massive. Net income shot up from $1.5 billion in Q2 of 2025 to over $2.2 billion today. We're talking about a 46% increase. That's the kind of leap that really grabs the market's attention. Moving on to Section 2, unpacking the profit drivers.
So how do they actually do it? Well, think of the Travelers' business model kind of like a dual-engine plane. Engine 1 makes money from core underwriting, successfully collecting premiums and efficiently managing claims. Engine 2 generates returns by taking those collected premiums and investing them before they're ever needed to pay out. When both of those engines are firing perfectly, boom, you get a multi-billion-dollar quarter.
Travelers CEO Alan Schnitzer really hits the nail on the head in the report. He points out the terrific results from both the disciplined underwriting operations and their high-quality investment portfolio. It wasn't just one side of the house carrying the weight. The whole shebang performed exceptionally well. Let's put some hard numbers to those two engines. Looking closely at the raw data, the underwriting gain hit a staggering $1.7 billion pre-tax. Meanwhile, that second engine, the net investment income, jumped 14% to $883 million after tax. That was largely driven by higher yields in their long-term fixed income portfolio.
Okay, Section 3, decoding the combined ratio.
Now, if you're a bit newer to insurance financials, let's just quickly translate this jargon. Think of the combined ratio like a golf score. Anything under 100% means you're actually turning a profit from your underwriting alone before you even touch your investment income. So the lower your percentage, the better you are at pricing risk and managing your operational expenses.
And here is the crucial metric to keep in mind, 83.6%. That is Travelers' consolidated combined ratio. To put that into perspective for you, it's a massive 6.7-point improvement from the prior year. Basically, their underwriting team is out there playing a championship round of golf right now.
So what actually drove that brilliant score? Well, it boils down to two major things. First, lower catastrophe losses. Those came in at $518 million pre-tax, which is significantly lower than last year, even with some severe weather out there. And second, highly favorable prior year reserve developments, totaling $578 million pre-tax. Essentially, that just means their historical claims ended up costing way less than they originally estimated. Next up, Section 4, winning across all segments.
Out of a total $11.5 billion in net written premiums, business insurance is absolutely the heavyweight here. It leads the pack at just under $6 billion. That's followed pretty closely by personal insurance at $4.3 billion, and then the highly specialized bond and specialty group, which brought in a very solid $1.2 billion. If we zoom in on that heavyweight business insurance segment, you'll see they didn't just maintain their book of business, they actively grew it. They hit record new business of $805 million. That's up 8% year over year, all while keeping their incredibly strong retention rates holding steady at 86%. And honestly, the other segments certainly weren't sitting still either. Bond and Specialty saw an unbelievable 40% growth in their surety business, which really reflects their success with major large-scale projects. Meanwhile, personal insurance, their combined ratio improved by almost 9 whole points, mainly thanks to a better underlying loss ratio in automobile coverage.
Which brings us to our final section, Section 5, returning value to shareholders.
So with all this cash generated from that dual engine of underwriting and investing, How did Travelers reward the folks who backed them? Well, they returned over $1.5 billion in total capital to shareholders. And again, that is just in this single quarter alone. They essentially did this in a 1-2 punch. Step 1 was a heavy round of share repurchases, $1.3 billion worth. They bought back 4.3 million of their own shares at an average price of roughly $304, which really consolidates value for the remaining shareholders. And step 2, paying out a very reliable regular quarterly dividend of $1.25 per share.
But here's the thing. They aren't just handing all that cash back. As Alan Schnitzer pointed out, the sheer scale of their earnings lets them heavily reinvest in their future. They're aggressively targeting differentiating technologies, specifically artificial intelligence. They're investing at a level they believe truly sets them apart, all to just keep widening that competitive advantage that powers these kinds of results.
Which leaves us with a really big thought to close out this explainer. If Travelers can execute this flawlessly today, raking in massive underwriting profits and incredible investment returns, how much further will their significant investments in AI and technology widen the gap between them and the rest of the industry tomorrow? It's a fascinating question for anyone watching this sector. Thanks for taking the time to unpack all of this with us today.